For the next 7 days, I'm running a special on my lifetime membership access. It will be 25% off for the next 7 days. Right now, it is going for $105. So at 25% off, that would make the price for my lifetime membership $78.75. So again, for the next 7 days, PeezyFX lifetime membership will only be $78.75. If you are interested in joining, the only method of payment that I offer at this moment, which is temporary, it is going to have to be Cash App, Chime, or PayPal. Those are the only methods of payment that I'm offering at this moment. So for a side note, if you are using PayPal, I'm going to have to politely ask you to send the money through friends and family, because that will be the only way. I believe Chime is the same way. That would be the only way I will accept the payment. And as soon as you make the payment, message me on Discord. If you are not in my Discord channel, the link to my free Discord will be linked in the description below. Send me a message on Discord or Facebook, which is also in the description below. And as soon as you let me know, I will add you to the paid group. I would also like to announce that my mentorship sessions are 25% off as well. And if anybody has any questions about that, you can DM me on Facebook or Discord and we'll talk about it. It's 10 one-on-one sessions. All right, now I'm about to get into basically a weekly recap and also a daily trade review from today. All right, so let's start with the DXY. The whole week was a consolidation. So in order to operate in a market environment like this, you got to learn how to scalp. You got to learn how to be content with 10, 20 pip price swings in and out of your trade. So let's start on the higher time frame and let's try to get an understanding of what's going on with the DXY and why it's doing what it's doing. So right here we have this weekly buy side imbalance, sell side inefficiency. And last week we had strong push down and dug into that buy side imbalance in this bullish order block. So let's navigate down to the daily time frame. Right here we have a daily order block that is also a balanced price range. You have this single pass down and this single pass up. And then if you look real close, you have another little small, tiny fair value gap right there. All right, so going into the week, this area right here had my attention. And the 4-hour chart, this area right here had my attention. I did not see this 4-hour fair value gap until after it happened. After this happened, this is when I found it. And I wanted to see what price was doing. When we made this significant low on Tuesday, I was very convinced that this was going to be our low of the week. All right, so when this happened, I wanted to see what it traded down into. And once I realized what it traded down into, and then we kind of got this push up, took out that high, that's when I was convinced that it was going to be a up close week for the dollar. So here's the whole week's price action, a more zoomed in view of it. And we literally stayed inside of this range the whole week. It didn't really give us a whole lot to work with. Going after we got this push up there in London, we consolidated all through New York. And then after London closed, we got this retracement. So keep in mind, this is the weekly fair value gap. These two blue lines are the daily. So after we got this expansion up, I was hoping that this was gonna basically launch us out of the consolidation. We had this fair value gap right here that I highlighted. When it comes to the DXY, every single pair that has USD on the right side, you want them to move opposite of the DXY. Every single pair that has like USD CAD, USD JPY, you want those to move in sync with the dollar. So when the dollar is going up, Euro USD, GBP USD, gold, the indices, they should be going down. And when the dollar is going up, USD CAD, USD JPY, all of them should be going up. All right, so we had this fair value gap, price traded down, filled it in completely, traded down right here down in London, made that low of the day. And going into New York session this morning, you see how we displaced to the upside, taking out this high. There's our shift in market structure. And then we left a buy side imbalance right here. Notice how price traded down into this buy side imbalance, but can take that off. And we're still playing off the levels on the 1 hour fair value gap. Look how clean price reacted from the high of the 1 hour fair value gap. That was beautiful. That was perfect. All right, right here on Euro USD, this high right here was our next draw on liquidity. So there was one or two things that were going to happen, in my opinion. We were either going to trade up at the beginning of the week and take out this high and fill in this fair value gap. All right, and then we had targets on the downside that I wanted to see hit. That was my initial analysis on Euro USD. All right, my secondary analysis on Euro USD was to see price trade down first and dig into one of these two fair value gaps and then run up and take out this high and, more targets to the upside. So again, we have the high right here. I'm going to mark that buy side liquidity. And then we have the high of the fair value gap right here. I'll make that green. And we'll draw down to a 1 hour chart. Let's pay attention to the weekly profile and these levels. Our next draw on liquidity and the high of that daily fair value gap. So how to implement red folder news drivers with that weekly concept. Typically when you have red folder news, I like to see the red folder news affect the euro, not the USD. That way we could get that significant high during London. And by the time New York session hits, we will have a good New York open kill zone. All right. But in this case, we have red folder news event for the US dollar at 8:30, right after New York opens. Going into the week, we anticipate to see that high of the week form on Tuesday if you are anticipating lower prices that week. We don't get that until New York open. Red folder news event, 8:30, we jam up, and then we displace to the downside. I'm just gonna show y'all how I work my way in this trade. If you don't remember, 1 minute pullback, nothing special. I was just trying to get in sync with this order flow. I wasn't trying to look for no buy on a retest after this. Why? Because I was sticking with that weekly concept. Anybody else would have probably been looking for a buy to piggyback off this expansion up. All right, so this was the day we was targeting this consolidation during Asia. This accumulation of price right here is the liquidity pool, targeting the lows under that. Price jammed down, took out them lows, and then retested. We had deep retracement, but we traded up, made a significant high during London. And usually when you see that, you will have a down close day. You will have that significant high during London, and then New York session will give you a good short scenario. Right here, we got a perfect optimal trade entry, New York open kill zone. Price trades up, tags that level, 70.5% retracement. And then we displace to the downside, leaving a fair value gap. We dig into it right there, and then we expand, and then we have our inducement. Price trades up, takes out that short-term high, and that's why I got in the trade. And we wrote it down, closed it early. Should have held it, but it is what it is. Yesterday, I was trying to get in on a sell, ended up getting stopped out. We had a deep retracement. I mean, I was looking at the current dealing range. The sell attempts failed here at New York Open. Let me get on the hourly chart because this is the trade that I sent out last night. I was playing off of this 1 hour fair value gap. I entered somewhere in here. I had my stop loss slightly somewhere like right here or right here, and barely got stopped out while I was asleep. So going into New York Open, it just played out perfectly. We hit that 1 hour fair value gap and went into a period of consolidation. Right here, we got that purge of buy side liquidity. We went into another period of consolidation going into New York session. We got that displacement to the downside. And when we did, the first thing that I seen was this balanced price range. And that's what I based my entry off of. And I was targeting the previous swing low, for low hanging fruit. I was essentially targeting previous day's low, but price really just took its time getting down there. I closed partials a couple times during this price action. And you have a balanced price range like this, price out, it shouldn't violate the balanced price range. If your bias is correct and you have a clean balanced price range and price comes back up into it, this is one of them times where I will put my stop loss slightly above the fair value gap instead of raising it up above the order block. So essentially the bias was right because we did trade up and take that high. The thing is, we just didn't get no weekly expansion. We got held inside of a consolidation. But going into next week, I really don't see why we just don't continue what we started this week. So it's going to be one of those weeks next week to where I feel like we could open up on Sunday and just dump. Like, I don't know. We'll just have to see. But we just got done with a whole week of consolidation. So either two things are going to happen. Either we're going to open up on Sunday and immediately trade down and hopefully get in on a retest, or we're going to trade higher, run out liquidity from previous week's high, and then trade down. But either way, I want to see lower prices next week. Cable, we got this fair value gap right here that we was highlighting, and we have the buy side liquidity right here. Drop down to a 1 hour time frame. We had some clear targets to the downside, but like I said, held in consolidation. We didn't really get nowhere. We traded up, made this significant high going into that 8:30 news event and completely filled in that daily fair value gap. Unlike Euro USD, where we jammed through it, this one respected the daily fair value gap 100%. I know I traded GU. Need to go back and see. There it is right there. That 19,300 level. So the same thing that I was talking about on Euro USD, it was the same situation here, y'all. Just trying to get in on a pullback after this manipulation. So after they ran and stopped everybody out, we dug up into that PD array, that daily fair value gap, and reacted strongly from it. And if you get down on a 1 minute time frame, there's ample opportunity to get in this trade after that happened. So you have your purge of buy side liquidity. After that, this would be your current dealing range. Price trades back up above equilibrium right here. We have a fair value gap right there. Price nails consequent encroachment of it. And then we react. From that reaction, we have another little optimal trade entry right here that is coupled with a fair value gap. We trade up into it, completely fill it in, and then we just keep going. So basically after that, I was just waiting on a pullback. Going into that new hourly candle at 10 o'clock. When a new hourly candle opens, if you are expecting it to trade down, then what do you want to see happen first? You want to see that new hourly candle open and trade up first, and then break down. So that's basically what I did right here. Roughly 130 pips. All right, so here we are on the 16th. Y'all see the executions right here on GU and EU. I already talked about EU. Now I'm about to discuss GU, which is the very next day right here. You can just look at price action from New York open down until 10 o'clock. I see at least 3 opportunities to get in from New York open down until 10 o'clock. The first one would be to measure this dealing range from London session down until right before New York. Right before New York, around 5 or 6 a.m., we would typically go into a consolidation or a retracement. And that's what you want to see. Right at New York open, we are right there playing around that equilibrium level. We have a sell side imbalance, fair value gap, coupled with that equilibrium. dug up into it, we reacted, and on a 1 minute time frame, you'll be able to see a New York open kill zone. Basically, it's very tiny, but it's still there. So from the high New York open down to this low, price trades down and then it retraces. After that, it's just very smooth price action. You have price displaced to the downside. It gives you that entry drill, right? But then inducement takes place to where it trades up that inducement. We talk about it all the time, how it always tricks us up like that. 5 minute fair value gap. I believe that's where I entered at. Let's look one more time. Yeah, right there. And this is some good price action, although it did not continue to go in our intended direction. We had a deep retracement, and then price eventually traded up and took our previous day's high. It's just what you typically see in a consolidation, And by the time Thursday got here, Wednesday or Thursday, I was already like thinking to myself, this is gonna be a fucking whole week of consolidation. I want to see Wednesday give me a weekly expansion. And when that did not occur on Wednesday, I was like, what the fuck, But price traded up into that 5 minute fair value gap there. And we had a nice little expansion again. We have a gap right there. Price traded back up into it. Another opportunity to sell short. This is scalper's paradise. All right, so going into yesterday, I really was trying to get in on a continuation to the downside. But if you can think back to this day, I was talking about when you usually have a long range day London session, like a nice expansion like this during London session, and we do not start to pull back around 5 or 6 o'clock. Like, look, this is that 6:30 time frame. 6:30, we get a pullback and an opportunity to sell short. Usually you want to see a pullback around 5 or 6 o'clock, and you want it to retrace that expansion that London session gave you. That's what a New York open kill zone trade looks like. If price would have came up into this level before or right at New York open, then we would have been all over that and had a successful trade to the downside. New York open reversal. We got one final push down at the New York open and then failed to take out this low and just jammed up. So I got caught up in that right here. I went short on GU. I was targeting this previous low right here. Closed it before it got there. I did not trade this. When price came back up, I went short right here with the awareness that we could get like an inducement type of setup. So I held the initial position, suffered the drawdown, and added another position with like a turtle soup setup type deal, right? Inducement. Price traded up, took out this short-term high, dug up into this 5-minute order block, roughly 50% of it, I believe. This is how I like to see order blocks get respected. I like to see order blocks get respected just like this. Either it reacts from the low, the opening, or that 50% level. This is why I usually have my stop losses slightly above that 50% level or at the close or the high of the order block. But anyway, it was a nice trade. I got in on that one as well. So this is from today. Just want to show y'all. There's the Euro USD sell. Here's that GU sell. GU right there. All right, so GJ, pretty sure y'all seen the trade that I took off of this 1 hour fair value gap. I closed partials when London's high got taken right there, and I closed the remaining of my trade targeting this high of Asian session on going into Friday. All right, so this is what I based my entry off of today. I seen price jam down like the change in the state of delivery of this candle. Here's Asian sessions low. That's a purge of sell side liquidity. That's a stop hunt. You got a balanced price range. You got this huge push down to clear out sell side liquidity, and then you got a displacement to the upside, taking out a short-term high. When price came back down into the balanced price range and this fair value you got right here, I pulled the trigger. There's relative equal highs right here. When price took that out, I closed the majority of my position. I'm still holding on to this trade. All right, I put my stop loss at break even, and I'm still holding on to it. All right, so I found this setup kind of on the hourly. It was basically an optimal trade entry. I was just hoping that price was gonna continue to respect this bearish structure, right? Starting from Sunday, we go into kind of like a consolidation, and then London session going into Tuesday, we get a huge run up. You see this period of consolidation, and then price just displaces out of the consolidation, taking out the low, right? So this is what you call basically a market maker sell model. So essentially you have a consolidation, price jams out of the consolidation and comes back up, and you would be paying attention to that low and sell short from there. That's what I was looking at. That's why I wanted to see. Let's just take this low right here, just for argument's sake. So this is essentially the low of this consolidation, this accumulation. Price jams down and closes below that low, this red line. Notice how price is playing off of that level. You see it? I know you see it. Then we have a fair value gap right here. The high from the beginning of this displacement down to the low, this is a London open kill zone trade. Look how beautiful. People ask me, I mean, I got these field levels from ICT. You know, a lot of people just have like 60, 62, 69, or 79. I really just need these two levels right here, y'all. That 70.5 level, there's something about it. I don't know, price just really loves to respect that level, especially when there's a fair value gap. It traded up, nailed it. And going into New York Open, it just continued to respect that bearish structure. I did not get in this trade yesterday, but I'm using all of this data to help me with today. So from London, we are going into that 5 and 6 o'clock hour. Y'all remember me talking about that? So we get that expansion down there in London. And then right before New York session, we create a short-term low and start to pull back. What is that doing? It's baiting in retail traders. I was just talking about this with Khalid the other day. When price trades down and makes that relative equal low, it failed to take out that low. All that's doing is giving you a target. It's baiting up retail traders. They're going to look at this as an area of support. They're going to see a strong reaction from it here. So when price comes back down, they're going to get in it, and then they're going to get smoked. So price trades down, makes that relative equal low, and then you extend that out in time. Right here, 7 o'clock going into 8 o'clock, New York Open. We talking about perfect. 62% retracement level, nailed it. Optimal trade entry. We'll drop down to a 5-minute. So you can see this right here is, you know, reveals a 5-minute fair value gap. We nail it from that high down to this low. Price trades up, takes out buy side liquidity, resting above this high, and then it expands. Perfect. Looks good. All right, so after that little short expansion, we just went into a consolidation. We had one final expansion to take out these relative equal lows, Asian and London low. And after that happened, nothing. Went into a consolidation. So from this high, the beginning of the expansion out of the consolidation to the low of the previous day. So this is the dealing range that I'm dealing with coming into today. You take that dealing range from yesterday, expand it in time, expand it out in time, and look what you have. You have a beautiful, beautiful power of three. Do you see the power of three? And this power of three is directly related to the dealing range from yesterday. This high to this low, you anticipate that accumulation, manipulation up into very specific time and price. We get that manipulation there in London, that Judas swing to clear out liquidity. After that, it's just bearish structure getting respected nicely. Y'all should be able to see it. I placed this trade before I went to bed. All right. I just had faith in the setup. I already seen this accumulation. I did not want to see, I pretty much knew this high was gonna hold true. All right. So overnight, I would place my stop loss above this high just in case. And then when I wake up the next morning in this area, look where I'm at. So this gives me opportunity to pull the trigger again. I didn't, all right, because I didn't get on the charts until at a later time. But I pulled the trigger right here. All right. SPX, this is something that I was looking forward to talking about. All right, so look, the video that I made on, it was Sunday. I believe it was Sunday or Monday. No, I'm sorry. It was Sunday. I made a video on Sunday and I was talking about one or two things that was going to play out on S&P 500 this week. All right. The first thing that I was talking about is I was anticipating lower prices. We are inside of this point of interest. The sell side imbalance is fair value gap. And we were right here, right? So what I was talking about is price trading up and then coming down into this level. That's exactly what it did. Now, the second thing that I was wanting to see happen was if this did not pan out and we traded down first and made a low of the week on Tuesday, I wanted to see that low form inside of here and then trade up and possibly get up into this level, 50% of that level, or maybe even take out that high. You know what I'm saying? Whatever. But I just really love the way this panned out because my analysis was so on point. It's just good to see. Even though it took its time getting there, we literally stayed in a consolidation inside of the same range for 3 whole days before we broke lower. And what you're going to see here is another market maker sell model, what I was talking about a while ago, where you had that consolidation, price breaks out of it and then comes back up, hits that low. Do y'all see it? You see what I just circled is what you're going to see from Sunday going into the end of Tuesday. We have that consolidation. This daily candle, we open, we trade up, and then we jam down. Now we're going to drop down to a lower time frame and keep all these areas on the daily, keep them in mind because these are always the most important levels that you're going to play off of when looking at the lower time frames. All right, so Sunday and Monday, we have a period of consolidation. Monday's PM session had a really, really nice turtle soup trade. Price traded up, took out Friday's high, and just jammed. It's things like this that in due time, you guys are going to be able to spot and catch them like it ain't nothing because it's all about time and price. Now, if I get down on a lower time frame, I'm pretty sure that 1:30 p.m. at the start of the PM session is when this occurred. See, 1300 hours, that's 1 o'clock. So from that 1 o'clock candle to that 2 o'clock candle, look what happened. And then PM session kicked off. And by the end of New York session, you should be closing before 5. This is 5. So at the end of that 4 o'clock candle, you should be closing. That would have been perfect. So here we are on Tuesday. We trade up. We make a very significant high. We opened up inside of this daily fair value gap, right? So when that happens, the only thing that you can pretty much anticipate is for price to trade up and completely fill it in or react from the consequent encroachment level, right? So you're going to get your daily fair value gap. and mark out these specific levels. And these are the levels that you're going to play off of all fucking week until price breaks out of it and then comes back into it and then leaves it. But these are all significant levels. Now I'm going to delete this because I don't want it in our way. All right, so there's our daily fair value gap levels. All right. Power of 3, where we have the accumulation essentially started on Friday. We got the accumulation right here. Here's that manipulation right there. There's your Judas swing. You got to learn how to trade these Judas swings, y'all, because this is that one shot, one kill. This is what ICT talks about. I used to solely just specifically trade these setups, one trade, 1 week. I did it for quite a while. I would wait on Tuesday to give me that significant high, and I would play off a higher time frame PD array, such as this daily fair value gap, and I would hold it until Thursday New York session. How many times do I scream at y'all and tell y'all, in bearish conditions, always anticipate on the high of the week to form on Tuesday and the low of the week to form on Thursday? And if you would have used this concept, how can you go wrong? Sometimes I'll get lost. Everybody's going to go against the rules. You know what I'm saying? It's just human behavior. It's human behavior, man. Like, everybody goes against the rules. And that's why on Thursday I had a bad day, because I was ignoring the fact that Thursday typically creates the low of the week on the opposite end of the range, specifically around 10:30, going into what happened after that Red Photo News event on Tuesday. They used that to give us that high of the week. And when you see Red Photo News events, again, I'm going to repeat it. When you see Red Photo News events on Tuesday, especially during London, this is what you want to see in Red Photo News events for during London, because that's going to give you the high of the week and the high of the day on Tuesday. And when New York comes around, imagine this happening over here. That way at New York Open, this will happen. That's how I knew to go short here, because I knew that it was just a little late playing out. So we got that push up, we jammed down, displacement. I would have loved to have been a part of that. Got in on the retest. Time of day, we already know. We already know what's going on. Don't expect to ride price down going into Asian session. We're going to get accumulation and manipulation again. That's exactly what happened. We got that accumulation. We got that Judas swing going into London, and then another down close day for spools. I did not get in this trade until the PM session. Here's 1:30. So I had to get down on a 1 minute time frame. All right, so displacement, this is 1:30, right? Right there. That's 1:30. Look what happens at the beginning of PM session. This is that 1:30 candle, a 1 minute candle. We displace to balanced price range. Single pass up, single pass down, returns back up into it, and then jams. I didn't catch that. I like big displacements. That's what I like trading off of. That is nice or whatever, but usually when I'm trading the PM session, I will just sit here with my arms folded and wait until 1:30 hits, and then 1:35-ish, and I want to see something happen. You don't know what's going to happen. It could be a purge of liquidity, right? But in this case, it was not. It was not a purge of liquidity. It was a displacement to the downside. Excuse me. It was a displacement to the downside. When we got that, I played off of this level right here. Consequent encroachment. I pulled the trigger before then and wrote it down. All right, today, I think I play off of the 2 or 3 minute time frame right here. We got New York opening right here. Let me get on a higher time frame so I can see what's going on. Turtle soup. All right, Asian session, accumulation, manipulation to the downside, push up. Why did we push up? Just to take out previous day's high. All right, as soon as we took out previous day's high, I was waiting on a displacement. we had this displacement after this happened. You see this little fair value gap here. I pulled the trigger. Initially, I placed my stop loss up here until price started going down. Then, you got room to drop it. You're just watching price action. At that point, it's playing out perfectly. We got a target right here. Pretty sure that's where I closed that, somewhere around in here. Traded NASDAQ today. First entry, basing it off this whole little situation right here. Herds of buy side liquidity. You got that run on buy side liquidity. You had that displacement creating a fair value gap. Institutional order flow entry drill completely fills in the fair value gap and then drops. Price traded right back up into that same level. I pulled the trigger. I stacked another trade. We had a displacement right here and a pullback. Price played around that level for 10 minutes and then targeting this low over here. Perfect. I pretty much knew that I wasn't going to get I wanted to see this ran out. Pretty much knew that wasn't going to happen. Being that it's a Friday and you ain't going to get no huge expansion on Friday most of the time. But on the daily time frame, look what happened. Fair value gap, we traded up into it, went into a consolidation. Remember the red photo news from last week? That huge expansion to the upside. Now what do you think is going to happen? We basically traded from one level to the next. Once price gets down to here, you can pretty much be looking for buys, anticipating price to trade higher, taking out this high. I'm just saying how you use these daily levels to help you, navigate. Yeah, I pretty much know the drill. New York Open, that was a PM session trade. I'm sorry. There's that 1 o'clock hour. So I got in before that PM session kicked off. From this high to this low, right here at London close, we go into a consolidation. This is your accumulation, manipulation up into a specific area, and then expansion lower. So basically, this was my dealing range. This is what I was seeing when I chose to enter this trade. Right here, equilibrium, fair value gap. So I sold it twice and up in here. It was a 1 hour fair value gap. I'm sorry, let me see what that looks like. Okay, there we go. That 30-minute fair value gap was smaller, but this is obviously what I was stemming my entry off of. Consequent encroachment of that 1 hour fair value gap and drop down to a lower time frame now. We anticipating that PM session expansion. Didn't get it, but still made money. Sell it, take partials after a nice expansion. We got a little short-term swing low here, close it there. I ended up getting stopped out in profit, close to break even. Y'all seen the gold trade from today. I already talked about that. The SPX, the US 30. I talked about that. I was thinking that I was talking about NAS, but Euro USD, GBP USD, GJ talked about that. Overall, good day. I'm glad today went like it did because yesterday was horrible. It was really a horrible week, man. I was just telling a buddy of mine, like, you can't be, let's go back to the majors. Cannot be upset. If you did not find your way into a trade and successfully execute it and exit in profit, you can't be mad at yourself. Now, I just showed y'all a long list of trades that I executed. But see, this is the benefit of only trading that specific time window from New York Open to London close. You want to catch that expansion that New York Open provides almost every day. That's how you get in and deal in small, tight ranges such as this one. If you were looking for, like we are looking for big expansions, that's the power of closing partials. You close partials, you pay yourself. When you're in a range like this, you're going to get stopped out every time if you hold it. That's why you close partials, place your stop loss at break even, and let it do what it does. Look at that. It's just ugly as fuck. It's price action is ugly as fuck. But guess what? After a consolidation week like this, we're going to have a banger. I feel like next week going to be a good one. All right. Just to let y'all know, for the next 7 days, I'm running a 25% discount on my lifetime membership, as well as on my mentorship sessions. If y'all have any friends who want to come to the winning team, let them know. So instead of $105, it's gonna be roughly around 75, 76, I think. So I'm gonna do that for the next 7 days. My mentorship is more expensive. You get 10 one-on-one sessions, you know, me breaking down all the ICT concepts in depth, like anything you want to know, I teach it to you. But I'm also running a discount on that as well. That US 30 trade. It was very nice. All right, y'all. So I'm gonna go ahead and cut this short right now. I'll be back with y'all on Sunday. Y'all have a good weekend.